In 2021, Congress passed legislation designed to assist millions of families and small businesses. Specifically, the American Rescue Plan provided monthly child care tax credits, rental assistance, mortgage assistance, and billions of dollars to small businesses. Unfortunately, language buried deep in the legislation now requires that taxes be assessed on any transactions processed through Cash App, Venmo, Zelle, and PayPal. Please stay tuned after the bumper for more information.
Get the money. Get the money.
The government gives, and on the other hand, then it takes back. For years, in order to complete a person-to-person transaction, you either had to have cash, a money order, or check. And even to carry out this activity, you either had to go to your bank, local convenience store, or ATM. And then Cash App, Zelle, PayPal, and Venmo changed the game. Each of them allowed you to transfer money to anyone who you preferred, and in many cases, there weren't any fees. Well, lo and behold, now comes the government, and now they want to tax transactions that are sent through these applications. The way that it used to work is in order to be taxed, you would have to have at least $20,000 in a calendar year in transaction activity, or at least 200 transactions in the course of a year. Now, that has changed. If an individual or an organization has up to $600 in one calendar year that has been sent through these applications, that information has to be reported to the IRS by these vendors. This law went into effect on January 1st of this year. In the past, merchants have been required to self-report. Now, because of the law, these vendors have to send 1099-K forms to the IRS at the end of the year if the transaction activity is above $600. Millions of regular people use these apps, and because of this, they could be forced to pay taxes. PayPal and Venmo offer their users the ability to go in and select person, family, and friend in order to avoid taxation. Cash App and Zelle users need to go into the memo section and indicate this as well in order to prevent taxation. One last thing to note. The Build Back Better plan has $80 billion set aside for the IRS. This money will be used in order to upgrade their system as well as hire additional employees. And ultimately, the money will be used to collect on all of this taxation. So it appears that Joe Manchin is the voice of reason in the Democratic Party. He's the one member that hasn't voted for the bill yet. And if it is not looked at closely, there are many provisions like this that could greatly affect regular Americans like me and you. If you like information like this, please hit that like button, please subscribe, please hit that notification bell so that you can get future videos like this. As always, thanks for watching and get the money.